Good morning, good morning. Elijah, Brian, good to see you guys. Sorry about that. Just make sure to log in. All right. Sorry, is this on the wrong? All right, I apologize for that one. Just had to make sure I was on the right angle there. Good morning, good morning. But all right, guys. Well, why were we so zoomed out? Sheesh. All right, guys, we're gonna go ahead and get started here with gold. Today we're gonna mainly cover gold, US30. We're gonna also review USD JPY. Yesterday we weren't able to review USD JPY because of the news events that started to come into the market. We needed to adapt quickly to that. And that held, as you can see, momentarily. We had that nice sell-off. It was a lower time frame break and retest, a bit aggressive. But we did make a move down into the 4460s, but we basically recovered that entire move. So let me just get rid of these zones right here, because it looks like really just by analyzing the market with the same zones that we had, like this 4455 area, that one can pretty much stay the same. I'm gonna move it slightly down just to make sure I cover the lows of the current price action, or excuse me, the lows that were made yesterday. We can still see it lines up with this previous resistance, but we've climbed back above those 4500s, guys, and that 4500s area, we'll do some quick analysis on it. Remember that the 4500s on the 4-hour was that key level, that structure zone that we wanted to maintain below that area, right? We want to make sure we stay below the 4500s to signal to us that more sellers are in control. So like I was saying, you know, we had that momentarily. We stayed below the 4500s, as you can see, after we did this retest, made another push lower until finally breaking and closing back above that area. I think yesterday, yeah, I believe it was yesterday, I was talking about the importance of waiting for candle closures. Look at how these candles closed with wick rejections, right? Failing to get above the 4495s area. Not the 4500s exactly, but more 4495s. You can see the wick rejections just around this zone. Same with these wicks, same with this wick, until finally we see a candle closing above our area of interest. So no longer giving us rejection signs, no longer giving rejections at our area of interest, and we start to climb above that area, even breaking above previous significant points, which is, for example, you have, let's say this low, high, low, high, and then we had this drop, right? This is what the momentum that price was on, especially after breaking those lows. We know that that was an easy sell that we saw happen yesterday live. Very, very aggressive, right? So again, we wanted to make sure we stayed below this structure point, for example, around the 4500s, to maintain this momentum. But we can see we've traded now above that. We're closing above that area and back above the 4500s. Looking at this 4-hour, we're still now more on the bullish scene because of the fact that, again, above those 4500s, you can see in the past just how strong buyers have come in at this area. So anything above those 4500s for this session, obviously we're gonna go ahead and mark off some new zones. Like we have this resistance at 4540s. And we can see towards the left as well, previous areas of resistance just around that area. Same as right over here, resistance. Here got a little bit messy, but overall, even like around these areas, this was on May 15th on a Friday, or on Monday of May, what is it, May 18th, we can see the support that was created around the 45.40s, just around that area. So that's gonna be our key area that we just marked off for today. And then I'm gonna mark off another zone, but I'm not gonna mark it as a key level, more as like a 1 hour zone here. Let me just get this line straight. Why isn't that? It's like stuck. There you go. So we know, like I was just explaining, we already know that on the 4 hour, above the 4500s, that's more bullish. Once we start to get above the 4540s, that's where we can see that momentum continue with this current bullish momentum we're on right now. Once again, above the 4500s. But we've created this new low at the 45.15s. And so if this momentum is going to continue, as we see towards the left right here, and just extend this a little bit. If we're gonna continue on this momentum right now, just based off the, the bullish confirmations that we're seeing, we wanna make sure that price does not get below the 45.14s, right? The 45.15s. We want to see if we can continue with this momentum on this bullish side right here because of the fact that we're trading above multiple areas of interest. On the 1 hour as well, you can see that after we had, let's say for example, this strong push down, you can see as price action breaks out of that structure, breaks above a previous area of significance, you can see how the momentum shifted, and that's what we're adapting to right now. That momentum that price is on, what we have to look out for is the fact that we're getting exhaustion at these highs, at the 45.40s. That exhaustion, we can see that it can come into these lows right here and reject and still continue to push towards the upside. To make it simple, we would only really think about switching our bias, at least momentarily, once we start to get breaks and candle closures below the 45.14s. Because at that point, we would have rejections off the highs, and then momentum below previous lows. So at that point, we know we have more confirmations in our favor that sellers are going to step in. Rather than going in aggressively at these highs, because we don't know if price is gonna reach these highs and then break out higher, I would much rather wait for the rejections, which is what you're getting, right? You're getting some exhaustion. I want price to get to the support and break below that area of support, so I can look for breaks and retests below that area of interest, right? Just because of the fact that, again, we're still more bullish, I'd want to make sure we get the breaks. Kind of like yesterday. Yesterday, we were more on the bullish side. We were waiting for rejections. We saw that the news event came in. We started to adapt, and we said, let's adapt to more sells and more breaks out of the lows, and we got a very aggressive break and retest, right? Like if we can just point that out here. Let me just quickly point that out for you guys, so the way we can review gold and see what it was exactly that happened yesterday. Sorry, give me 1 second, 1 second. There it is. So again, this was the aggressive break and retest. You had the very aggressive breakout, and then the retest didn't exactly go to the zone. It got some more near the zone. I believe we were talking about like how this was a specific candle pattern. So we got near the zone, and then we just ended up selling off right into this area where we once more started to show exhaustion, failed to break any lower, and then that's where we had our recovery, which is where we're at right now, right? So let me just go back to the intraday timeframes here, because that would be it for our review with gold. We don't have any economic data to look out for until, let me see. Oh, I was like, wait, what? That's today? Never mind. At 10 a.m. So 10 a.m. Eastern time, we have JOLTS job openings. So we know we have plenty of time. We have we're basically pre-NYSE. We have to watch then NYSE open, and then still another 30 minutes after NYSE open. That's when we'll get the JOLTS job openings. We'll have to be on the lookout for that report, because right now, remember the focus has been on inflation. So any sort of strong labor market reports, that's not going to help the case in terms of bringing inflation lower. So if we see that the labor market is still strong in the US, if anything, that can still contribute to more inflation. That's gonna still keep the Fed, if anything, more hawkish, right? We know that the data, or excuse me, that the main focus right now in terms of economic data is more so on CPIs, the PCEs, the PPI, right? All of those inflation reports. But still, we want to understand how the labor market looks, because that still adds on to that same fire. It's still part of like the same overall narrative, right? Same economy. So again, if we see very strong labor market reports, because it's not just Joe's job openings, it's Joe's job openings today at 10, tomorrow at 8:15 in the morning, we have the ADP employment change. And then on, let me see, this is Thursday, initial jobless claims. And then as always, first Friday of the month, we're always gonna see unemployment rate, NFP, and then we also have wages on this day. I'm not sure why it's not coming out here, but we have wages on that day as well. So again, all of these things are important for us to know, because if you think about it, when there is strong employment in the US, usually that'll lead to more people spending. And so more spending in an economy that might be overheating can contribute to higher inflation in the long term. Right, or in the long run, not right away, but in the long run. And then again, the Fed starts to anticipate that. How do they anticipate that? How do they combat that? By being more hawkish, which we know has kept dollar more bullish. But speaking of dollar, let's go ahead and take a look at dollar, and then we'll move on to US30 and then UJ. But yeah, dollar as well, you can see we pretty much corrected that entire move. Let me see, I was looking at an article yesterday. I wanted to see if I could send myself that link. Give me like 1 minute here, guys. Okay, sorry. No, I can't. I don't know how I would be able to send myself the link, but that's all right. I'll share it with you guys if possible. But anyways, back to the charts here. So dollar, from yesterday's move, we've completely corrected that. Gold as well, we've corrected that entire move plus some, because yesterday's move came from around these highs, around the 45.05s. That's where price started to melt from. But we've broken above that. We've basically corrected that entire move. So that's why we're still following this momentum here with gold, right? So dollar, we see the correction. Gold, we can see the correction as well. In terms of technicals, like when we were looking at gold, they got a little bit messy, because it's like you were bullish yesterday above the 44.95s, but then you broke below that, which then turned it more bearish. But then he broke back above that like hours later. So it got like very back and forth, very mixed there for a second. Sorry, I think I connected here. But all right, let's move on to US30. See what US30 looks like. US30, the buy plays that we were looking out for yesterday, before we saw all that all the news coming out, was above this area here, the 50,930s. Was the main buy zone. You can see very aggressively after you started to get candle closures back above that zone, you did get momentarily some pushes towards the upside there. But overall, we pushed below that zone. And again, we know we came from that shift in the sentiment from yesterday, from the news events that we saw, which we saw oil, we didn't look at oil, but oil changed. We saw dollar push towards the upside. We saw gold pushing down. US30 was pushing lower. So we know that push came from a fundamental event, and we pushed down into these lows, these previous highs right here. As you can see the market always will go to previous price points. Like, it's not a coincidence, it usually will tend to do that. And look just how precise it did it in this case. Like, that was before we even had our zones marked off. Price still made it to around this area, and the candle closures were above that zone of interest. So above this zone of interest, you have to be on the lookout if price is going to continue rejecting this area. It's also an area where in the past, if you're looking at US30 here, for example, you're looking at an area where in the past you have seen strong buyers coming in. Below that area is where you see the strong sellers. Make that better. right? That's where you saw strong selling pressure. But again, that was below the area of interest. Or even here, this rejection, this wick rejection on US30 on the 1 hour, you can see this wick rejection getting to that area of interest and selling off, but that's below. Here, you got candles closing back above that area of interest. It got a little bit messy as it got there, right? So it made a little bit of a range, but overall candles were still closing majority in favor of buys above that zone. And then you had this strong push towards the upside. Here, once again, another strong push. Here, this is still a pretty decent push. Right now, as we speak, we're still like, 10, 15 minutes before the 4-hour candle closes, before we go into like those pre-NYC hours, we're still rejecting this area. So that's why above this zone, which is, let me tell you guys precisely, on US30, the 50,820s is that zone of interest that where if we can maintain and hold that support, be on the lookout for buys at least up until like the 50,900s, right? Which is just around this area right here. Kind of like targeting these highs. And then above that, of course, momentum can pick up, and then we can target these highs around the 51,000s, more or less. So for US30, I would remain bullish, really above that zone of interest. Only would look to sell if we get candles closing below the area. So that would mean a candle has to close below this zone for us to be on any sort of lookout for sells below our area of interest on US30. Because again, overall, the bias really hasn't changed much. That's why I'm thinking like below the area of support with momentum, we can easily see another push lower down into like the 50,660s, especially knowing how volatile US30 is. That would be our analysis for the day. So bounce plays off of this area and corrections, continuations above this zone. And then of course, this is, if we can even get above the 51,000s, that's when we'll be worried about any sort of continuations above like these highs right here, okay? So we'll keep it simple today. Not today, but always. We always keep it simple. And let's go ahead and do some USD JPY analysis. Because UJ played out from yesterday. This is the thing about Forex. Remember, we're doing gold, US30, and Forex. All three behave very differently. Like you're gonna see, especially USD JPY, it's gonna be a lot slower compared to US30 or gold, right? But going off of the analysis that we had from last week, remember we've been more bullish on the dollar because the dollar, if we remember the area of interest on dollar was that 99.0s, right? It was this area right here. Good morning, good morning. Sorry about that. Let me see the chat before I move on to USD JPY. Good morning, Marcia. So you identify key levels, then you let the market give you direction indication. Let me see that again. AD, good morning to you, by the way. So basically you identify key levels. Okay, we do. Then you let the market give you direction indication, usually through candle closures. That's true. Then you wait for the correction and then you enter on that continuation. Yeah, because I want to get basically what you're explaining, as I would say, pretty much my approach in the sense that, I let fundamentals give me the overall narrative, but at the end of the day, I follow structure. Like I could be bearish on gold, but if structure is not bearish, then I'm adapting to that price action, because a lot of times you could still be bearish on gold, let's say fundamentally, or bullish on gold, but price has to do pullbacks, right? So a lot of times if my fundamentals are still bearish, like in this case with gold, with the war still going on in the Middle East, inflation concerns still being an issue, fundamentally we still understand that that's still more bearish for gold. But we have to let the technicals align with us. So that means that we need to let structure align with us. In this case, us looking at gold, when we think fundamentally and structure-wise, that's being validated on the higher time frames. That's on the daily time frame. If we look at the weekly time frame, even like I think, not the monthly is super bullish. If the weekly, actually, even the weekly, I would say no, actually no. Because if we look at where this high came from, like if we're just looking at market structure on the weekly time frame, and we ask ourselves, where did this high come from? It came from around the 4800s, which was this low that price created just around this area here. Actually, because you see it's a very long wick. I'm looking at the candle closure. The 4800s is around the area where this candle closed, and we pushed towards the upside from there. The wick rejection though is at the area of interest where we're at right now. It's this strong area over here around those 4400s, right? But still, the fact that we traded below this area, like let's look at the visual of that. We have, let's say, a high, low, a high. This low went all the way down here, but the candle closed up here. So I'm following this structure point, the candle closure. That's on the weekly time frame. Look at how we broke below that. That was a fundamental driver that broke below that, right? That was yields skyrocketing as the war in the Middle East progressed and gold started to shift out of that narrative, right? So on the weekly time frame, gold is more bearish in my opinion. On the daily, also more bearish, right? So fundamentally speaking and technically speaking, on the macro time frames, that's still very much the case in my opinion with gold. Remember, it's not until we get above these highs right here that we'll switch out of that narrative, right? So daily time frame, weekly time frame, still very much bearish. But when we look at the 4 hour and we see that price action is in this current phase, which is doing pullbacks and going against that overall narrative, I as a day trader, I need to adapt to those conditions, right? So that's why a lot of times you might see that I'll talk about bearish fundamentals, but then we'll still be talking about bullish ideas. A lot of times it's going to be based off of the candles, right? The market structure, the current momentum. That's what we'll do, because again, we're day traders, right? So a lot of us, especially, speaking for myself, I'm not waiting days or weeks for the technicals to really only align with the fundamentals. Like there's going to be those times where I'm going to adapt to the pullbacks. I'm gonna adapt to price action doing what it's doing right here, for example. And I'll wait for price to then go in my favor overall, Like yesterday was a good example of that, where I was willing to adapt to buys as long as we stayed above our area of interest. That was very much the case. But I understood very much that if we break below those lows, we're back on the bearish side for the 4 hour and the 1 hour. I have to follow through with that as well. But price action is what gave us that. Obviously, the push came from the fundamentals, but price action showed us that. That's where we got that visual. That's where we got that confirmation. So I hope that answered your question there. And then let me see what you said. You said any concerns about the previous long wicks on US30. I mean, that's why I'm still bullish off of this area, because of the fact that price, even with these wicks that it left here, it rejected and it closed above that area of interest. So that's really what I'm looking to do. Right now we have one wick at these lows, and it looks like for the moment, unless in the next 5 minutes the candle closes below the area of interest, we would still be rejecting this zone. So we'd still be bullish above this area of interest here. It just could be very aggressive, because when you look at reversals or like bounce plays, they're aggressive because you're going against the current momentum and you're looking for that momentum to die off. You want to see exhaustion, and then you need to have volume and momentum in your favor to go against that overall move, which in this case you would need buyers to really step in here to push price higher so you can make profit off of that. All right, but hopefully I was able to answer you guys' questions. Okay, thanks. Starting to comprehend it better. Yeah, if there's anything that you might not understand, just ask the question. Feel free to go for it, and I'll try my best to clear that up for you. But let's do a quick analysis on UJ, guys, before that 4 hour candle closes. So UJ, we were bullish on this fundamentally because it's the dollar. So we have the dollar against the Japanese yen. We know that the dollar right now has been very strong. That's where we left off. We're trading above the 99s, which is on the daily time frame, this area of interest here, this daily support. We know above that we can still be very much bullish and look out for buys on these dollar pairs, right? Only below those 99s is where we can see some corrections, at least momentarily. But for the moment, still trading above the 99s, dollar still strong. We look at UJ, we can see very much that is the case. We see a very strong dollar against the Japanese yen with this bullish structure that's being created of just continuous higher highs and higher lows. We're right now peaking and going into a new higher high. So the daily time frame is very clear. 4-hour candle also, this structure, very clear. When we first started doing analysis on UJ, we were using this area, the 159.200s, as our area of interest because it was the previous resistance. It was also this support. And so we were looking for rejections off of this area, mainly the 159.200s. We broke below that zone momentarily. We made a low at the 159.100s, so just 10 pips below our main area of interest. And then we started to close back above. You see Marcia, this goes back to I believe it was Marcia that asked me. This goes back to your question from yesterday with the candle closures, right? Look at these 4-hour candles closing. For example, here you have candle closing below the area of interest. So that's showing you momentum is more on the seller side. But what happens when you see strong momentum on the seller side and then it gets followed up by a candle that closes back above your area of interest? That's showing you that even though sellers were strong and closed below, clearly the buyers are stronger, at least for the moment, because you're closing back above your area of interest. Back above an area of interest where in the past you've seen bullish moves take place. So look at how once you close back above the area, you have at least these momentary, we have these at least kind of like short-term, this is how I want to say, short-term moves towards the upside. Notice how price action gets back into the zone. Even though it breaks lower, look at where the candle closed. Candle still closed basically just above your area of interest, 159.200s, above your areas of rejection. Followed up by another bullish candle, still closing above your area of interest before you finally have your move take place. Let's look at that on the 1 hour. 1 hour as well. 1 hour, you see very strong momentum right here. Candles closing below. It looked like sellers were ready to step in. You had only about 2 hours worth of like bearish moves in the sense of like breaking below the lows. And that was barely anything. That was 10 pips. You know, that was 10 pips below your zone. Not even 10 pips. So it's a very, very short-term move before once again you get candles to close back above your area of interest. So if you're looking for sells at that moment and you see that candles are closing against you, you know price action is going against you. This is not what's in your favor. And again, look at that. Because of course we were looking at buys. That was different. I'm just talking about in the sense of like if you were looking for sells following this momentum based off the candle closures, you can see how that momentum was starting to die out. It wouldn't have been strong unless you continue to trade below your zone. And then of course you continue to break lower, but you didn't get that. You only started to get candles back above your area. You can see the multiple times, like how many times did price get here, continue to reject. They basically paused here. This is hours though, if not days. This is from Thursday, 10 in the morning is when we first got this to the zone. And then on Friday, not even, on Monday we could even say, because this was at market open. A market open price, or excuse me, on Friday when markets closed, we closed basically at 159.200s. As the markets opened, we have a gap towards the upside. We start to trade now back above 159.4s. And you can just see obviously what ended up taking place there. So overall, you see how a lot of the analysis that we do, because we do our top-down analysis, we usually do it at the beginning of the week. We have our fundamentals in play. We have our technicals in play. We cannot force when that's gonna play out, you know? We cannot force for buys to play out because we don't control the market. If we did, we wouldn't be having this conversation, of course. But it takes days sometimes for these ideas to play out. This is talking specifically about Forex, because Forex is a lot moving. And even like from 159.2s, I don't even think we have 100 pips yet, do we? From 159.200. Sorry about that. That was like not even, this is like 80 pips, if anything. 159.2s to the highs that we're at right now, not even 80 pips. This is about 60 pips. It takes days. This is why your size is going to be a lot different when you trade Forex in comparison to when you trade US30 or when you trade gold. So keep that in mind. But I do that review so that way right now for our analysis of the current price action, it's very simple. we just simply follow along to what we were doing, which was everything was bullish, including the 1 hour. Right now, we're now trading above a new area of interest. This area right here, I'm gonna adjust just to mark these lows, because we have candle bodies, wick rejections, these wicks right here as well, and then that continuation. Right now we're closing above our area of resistance. And then looking at dollar's under some pressure right now, a little bit. Dollar's under some pressure. I would expect for buys to continue, of course, just because of the fact that we do have candles closing back above your area. But just like we've seen in the past, we want to make sure we stay above that zone so we don't have something like this take place, where it's like you have candles closing above your zone, the next one closes back below, and then you end up selling off. So we want to make sure we get the candles to close above, but then the retests that happen, we want to make sure they respect the overall structure on UJ, which would be ideally staying above this previous day, this previous hourly candle's wick, lower wick. So that would be basically around the 159.730s. If within the next, within this session, we can pull back into this area and respect that zone and continue to trade above this, then I believe that the buyer's momentum can continue. If not, then we'd be trading back below a zone, trading below previous 1 hour candle wicks, excuse me, gosh. And then at that point, we'd be losing that bullish momentum, and you have to be careful for any sort of pullbacks. And at that point, I wouldn't look to take any sort of pullback trades, because I don't know if the pullback is going to come to only the 59.700s and then continue to push. I don't know if it's going to get to 159.600s. I don't think the risk to reward is there to take sells if price action starts to reverse. I would much rather wait for 159.600, get rejections off of that, exhaust at that area, and then look to buy to follow this overall structure here, which is USD JPY. So yeah, USD JPY, pretty simple. Let's look at the lower time frames really quick, because we're at the 4 hour candle close. All right, let's actually see how that 4 hour candle close. Yeah, super strong as well. Yeah, at that point, I think an ideal pullback would be not even to these lows. I would say 159.750s would be a good area to pull back into before you continue. So that way you don't correct because if imagine you do a full pullback here, you're basically correcting this entire move. Like at that point, it becomes a little bit tricky to really tell whether or not price is gonna bounce off of these lows. That's what we wanna try and avoid there. But yeah, USD JPY momentum, everything seems pretty clear, more on the bullish side. Looking at gold, all right, yeah, looking at gold, we're reacting off of that zone, so pay attention there. We're reacting off of that zone that we had marked off. We have a bearish candle closing, which is not the most ideal for buys. But still, as we continue to trade above this area of interest here, this seems a little bit aggressive, but we're still trading just above our zone of interest, which is kind of like this support, this minor support that got created for us. We want to see if that holds, so that way those buys up into these 45.40s are a lot more probable. Same with the, yeah, pretty much everything closed bearish just at this zone of interest. You can see, kind of like, if we mark the wick low, it's basically lining up with where the candle, or excuse me, yeah, where the candle body closed. So we're still holding bullish above that area there. Let's look at the lower time frame momentum and see what we would have to do. My FX, no, it's good to see you in the chat. I believe I haven't seen your name before. Is this your first time? If so, I hope that you can learn a thing or two. Egina, good to see you as well. I haven't seen your name. I try and recognize majority of people, so that way we can build relationships, and you know, we're not just talking randomly to each other. So I appreciate you guys for popping up on the chat there. But all right, let's quickly look at gold and this current momentum, because we're seeing very aggressive, we're seeing very aggressive moves off of these lows right here. So those lows are still holding. We still very clearly have buyers active at this area of interest. What I don't like, the only thing I don't like about this area here is the fact that we're slowly let me see, let me point this out for you guys. So you have your highs that got created, and by the way, we're on gold on the 1 minute time frame. We're looking at the lower time frames just to dive a little bit closer into the current price action. So we have the highs that got created. This was around the opening of London session. So we have 3 a.m. right here. From those highs, which was, again, here you can see the bullish structure that was being created, right? We have highs, lows, highs, lows, highs, lows, highs. We started to shift out of that structure. As you can see, once we, for one, we broke below these lows, which is the last low point before we created this high. So we broke below that right here. And then as we retested these highs, said we were trying to reclaim these highs and buyers were trying to continue to hold, we failed to trade above this area of interest. So the momentum was starting to die out. And then the fact that after that, you went and started to create a new low, and now this new high that created is also below the previous one. That means that the momentum was starting to shift. So you can see now a new low, a high, also below. This high here got a little bit messy because it started to like kind of range, kind of going back and forth. Overall, still respecting these highs. And then you have a push towards the downside as you break below this area right here. And you have this momentum pick up. So what I would want for buyers to really pick up, well, we want to see what we already saw, which is what we talked at the beginning of the stream, which was rejections off of the 45.14s, because below that we can do deeper pullbacks. So we want to make sure we stay above 45.14s, but now we want to make sure we get above those highs that were most recently created, because those highs are that medium point. That price, as you can see above that area, did have pushes towards the upside. Minus this one. This one was like a little bit of a fake out. But still, you can see how anything above that area has pushed higher, including here, here, even momentarily as it held above here, this area, and then we pushed higher. So we want to make sure, like right now, we're back at that area of interest. We want to make sure we reject. We have this 5-minute candle closing. Let's see if this 5-minute candle can close above this area of interest. We don't want to see candles to close below that. After this 5-minute, we'll have the 15-minute candle closing in the next 5 minutes. We also need to make sure that the 15-minute candle closes above this area. Once we do have that closure above, then we need to break these highs, and that's where we can see another push into these highs, and then I would hope into the overall highs, which is the 45.40s, and that's on gold. Just because of the fact that here a little bit of a range, but then we had a strong momentum. That's why I want to be careful in case price does end up breaking those lows. So far we're holding, I still see candles closing above. Very useful. Nice, I appreciate that, guys. I tried to make it so. But all right, it is on, let me see, yeah, it's 9:10, so we gotta, not even worried about the economic calendar right now, because that's still at 10 a.m., that's still another 50 minutes, so a lot can happen until then. Let's take a quick look at US30, see if we ended up doing anything. Okay, US30 is looking like it's breaking below that zone, guys. So we're still in that pre-NYSE. I know for the most part, most people, I'm not sure, most people would like to wait until NYSE open, because that's when we'll see a ton more of volatility and volume. I'm not sure if anybody, you can tell me in the chat, if anybody takes trades on US30 or like SPX or NAS before the market open at, NYSE market open at 9:30. So far, I want to see, the reason I say that is because I would like to see if pre-NYSE, or like this 30-minute candle that we're on right now, if it can close below, then that's where you have that candles closing below your area of interest. That's where you can follow that momentum. If not, I'm thinking price can easily still reject, because look at those wicks. This is what Marcia was noting earlier. She said, are you not worried about those wicks to the left on US30, which is this right here? It's like you have these wicks, it's like it's pushing lower, especially with this momentum that it was on, right? And it still paused and it still bounced off that area. So that's why I'm very curious to see if this 9:30 candle will close above because that I believe can give us a much stronger chance of actually rejecting if we close above. So far it's still like on the lower time frames. We broke below. This was a few minutes ago at 9:08. Let's see if we start to get any sort of lower time frame candle closures back above, because then if that's the case, then this would be kind of like a fake out, you can say. I just don't like to base my direction too much off of that 1 minute. That's why I like to tell you guys, hey, let's wait for, you know, the next 15 minute, 30 minute at least, so that way we have a much stronger confirmation. Right now, what you have is previous candles, but from previous days, of course. That's what's in your favor. But the current price action broke those lows. So we want to make sure, like on this 15 minute, let's make sure we stay above. We can continue to stay above. Again, that only increases chances of us seeing a bounce play. Remember, with the markets, there's no certainty. So what we do is we follow price action confirmations. And so that's why we have to wait. But all right, another 2 minutes there. My second day, love your life. I appreciate that. Samurai, Burger King Samurai. What do you take your entries, on the 3 or on the 5? I would say more on the 5 and the 1 is where I'm looking to take my entries. But my entries go based off of candle closures, really. Like candle closures and retest of my area. That's really the approach that I take when it comes to the market. I'm just extremely selective, you know, like very, very selective with trades. Like there's weeks where I take no trades, even with beautiful setups, but maybe I'm not too prepared for the trading day and I just won't take a trade, you know, so I'm very selective, which is, you know, very much opposite of what I used to be in my early stages of trading. Early stages of trading for me was just non-stop activity. Oh, by the way, guys, how are you liking the new angle? It's a little bit more zoomed in. You guys gotta let me know if you like that zoomed in angle, more like this, or the one that we had from yesterday where it was a little bit more zoomed out and you can see my beautiful tattoo in the frame. Let's see, I try to take a pre-NYSE. Pre-NYSE. Remember, it's NYSE, New York Stock Exchange, not New York City. Before things go crazy. Okay, so you try to get in before the volatility. I mean, that's still just as dangerous because you're in the trade before all of that craziness goes in. So unless you're in and out before 9:30, that's a little bit different. But you just gotta watch out for 9:30, you know? It's clear? Okay, cool. That's good to know. This is why you gotta listen to your videographers, you know? They know better. I was like, don't worry about it. It's good. It's good enough. And he's like, they have different visions. You gotta trust it. It's the same thing with tattoo artists. If you go to a tattoo artist, don't fight the advice that they give you. If you go to a good one, you know, one that has genuine good advice, they care for their clients, listen to your tattoo artist. They know better. You go over there and you're like, I want this right here. And you have, you probably didn't even think of the angle. They see things differently, you know? That happened to me with, I think, all my tattoos. All my tattoos, I pulled up, I tell them, hey, this is what I want, put it right here. And they're like, nah, this is what we can do. And they'll guide you. That's what you should look to do. Let me see. We're just waiting for NYC. So 15 minute on US30, still closing above. We're still rejecting that area, guys. So that's still holding there. Gold though, I'm not liking that 15 minute. I'm not liking how that 15 minute candle closed because remember what we talked about? Which is we need to stay above this zone. Right now we just got a 15 minute candle closing below with a very large rejection wick. That means whatever buyers were trying to step in got completely overrun by sellers and we're now trading below this area. So unless we can reclaim this zone and start to trade above the 45.15s within the next 15 minutes or so, I would not think about buying unless that's the case. That's above. Because remember what we were talking about, that if we start to see candles closing below this area, then that could mean that momentum is picking up from the sellers off of these highs. Let's not fight any sort of pullbacks, and let's not fight the fact that overall the macro timeframes are still very much bearish, guys, on gold. Only reason we're following buys is because of the fact that the 4-hour is trading above an area of interest, which is the 4500s, and the 4500s right here. This is the area of interest on gold on the 4-hour that we're trading above. That's why we're bullish structure-wise and technicals-wise. But remember, the daily and the fundamentals are still very much bearish. That's why we're not eliminating that idea of sells below our area of interest. So we'll wait for that 30-minute to close, and we'll see if we can get any sort of decent moves. Right now we're just kind of paused around that area. Let me see, AD. So when you identify key levels, do you find it beneficial to consider the psychological price areas too? What is a psychological price area? Like you zero out your prices, or like put it near, what is that called again? I'm gonna go back to school. I usually will zero it out, as you guys can tell. I'm not sure if that's what you're talking about. I usually will talk, like if I see that prices are at the 4507s, I'll call it the 4500s, you know, just because I know it's within that price range. And I always, you guys will hear my language, I'll say around the 4500s. I say that because I'm assuming you guys look at your chart and you see that it's at 4507 point, I don't know, whatever, 0.334. I don't need to say, hey, you know, watch out for 4507.334. Like it's too much. 4500s, and you see that price is at 4507, then you get the idea, you know, I'm still walking with you guys, you know. Okay, the rounded number, zeroed out number. Yeah, that's usually what I do. But you cannot ignore where it's precisely at. I say that in the sense of like, if I look at price right here, and I look at the highs, and I'm looking at this, I'm gonna say 45.40, you know? Even though if I really zoom in and I look at where precisely maybe this wick went to, that's 4541.916. Or the candle body is 4535.924, you know? But I say 4540s because again, it's these highs. You guys will know it's these highs. So it's like I always tell you guys, it's going to be the price range. As we get there, that's why we'll put these lines out, because we will get a lot more precise. That's why we use the lower time frames for, you know? So that way we can really zoom in and then really get that precision. That's why I'm comfortable with just zeroing out or rounding out whatever number I'm looking at, because I know I'm looking at the highs. That's all I want to say. Instead of me looking and saying these highs, I want to say the number to get at least an idea, a range, and especially because I talk to you guys, so maybe some of you guys might not be looking directly at my chart and you're just hearing me speak and say 4540 highs. You look at it and you understand, I'm gonna mark off these highs right here. I'm not gonna go to 4540 where Tarzan said and mark that off blindly. I'm gonna mark that, but I wanna know why I marked that. So again, 4540s, 4535s, you see how I did it again? 4535s, you get the idea. It's around these highs. So yeah, but again, don't get lazy with the trading. That doesn't mean be lazy. That's just to get the visual reference right here in front of you right away, you know? No, I appreciate my FX notes. What's your real name? So I don't have to call you my FX note. And how familiar are you with this type of trading? Technicals, fundamentals? I think bullish gold. I think above 45.15s, I would agree. Just right now, we're seeing also with like how this 15-minute candle closed very strong below these previous candle bodies over here to the left, around the 45.15s. So definitely that's where we saw like the momentum picking up. We haven't seen any sort of strong sellers, but we're not seeing any pushback from buyers either, which is what we need to see. We need to see buyers reclaim this area, It looks like right now sellers are trying harder. So by the time that this 30 closes, I think we'll have a much clearer picture of who is going to make their move. I think bullish gold above 4,500s. Yeah, but right now it looks like we're gonna do a pullback into that area. The question is, will we get it before we get any sort of stronger candles? Because right now we only got 15-minute candle close below. We had a slight retest, and then now we're getting that continuation. Let's see if we'll get any sort of further retest going into the new 30-minute. Because right now it looks like the move is taking place for the sells below after we saw that the 15-minute was closing below and invalidating or going against that bullish bias above the 45.15s. So we'll be patient there. US30 still holding above. It's literally stuck at that area. What I'm afraid of with US30 is that market open, man. Market open can easily come and just wipe out those lows if that's going to be the case. You know, obviously we have no control over that. But just based off price action, how we're getting the same rejections to the left here, like you have wicks rejecting and candles closing above, we end up having a push towards the upside. You can see it here as well. Wick rejections closing above, push towards the upside. Wick rejections closing above, push towards the upside. You know, when you look at price action and you look at probabilities and you look at all of these things happen, and you go and you make your assumption as to what could happen next based off of this, you're thinking, well, we're rejecting the area, we're closing above, we could see a push towards the upside. If it pushes lower, it takes you out and you end up taking a loss, what can you do? You know, like it didn't do it here, didn't do it here, didn't do it here, not here, not here, not here. You enter a trade, it goes below. That's the markets for you. It is, you know, that's what the markets are. But you can see just how many times that opportunity took place. You know, it took place yesterday, multiple times. Yesterday at market open, then you had a 10:45 and 11, then later in the afternoon it happened again, then going into Asian hours, or Asia session hours. So 9:30, yeah, absolutely. At 9:30 open is crazy. It is, especially with these indices, US30, SPX, NAS. When 9:30 comes in, the volume is sometimes too crazy. Like for the most part, I would say too crazy to the point where it's like you shouldn't even be in a trade or look to trade the market open. Obviously, everybody has their own trading plan. If you trade market open specifically, then to each their own. But I would say be careful. You know, I would say maybe that's more so on the scalping side, taking breakouts. If you take breakout trades and use 9:30 volume in your favor, that's part of your confluences or your market conditions that you traded, then you gotta obviously do what you gotta do. But as a day trader, you could easily probably, I would say, wait for further confirmations. You know, maybe let the breakouts take place and then go for the retest. That can be for one, so that way you're not chasing breakouts either way. AD faucet. Or yeah, exactly. Wait until 10 a.m. I know some, like for I would literally say one of the only, if not the only successful ICT trader that I know does not trade market open because they say it's just too messy. You know, they need to wait for more confirmations, more direction from the market, more candlesticks. So they'll wait at least 15 minutes, maybe even 30 minutes, like AD was saying, or AD faucet. So, like, that's what I was saying, you know, to each their own. That's where you have to come in with your own plan and really solidify what you do specifically. But keep that in mind, you know, that the volatility and the volume that usually comes in around that time on indices is pretty hectic. But all right. Yeah, gold kind of really just slowing down at this area. Like, it's not doing anything crazily. Like, it's not how we've seen it in the past where it reaches a zone and it just goes. And it gives us clean break and retest, like if we have a clean bias. Right now, it's kind of pausing around the zone. I want to see how this 30-minute in the next 3 minutes will close. Right now, it's looking like it's just gonna close very weak. so not really giving too much info. When it closes weak like this, these candles, I hate these candles because it's like a wasted candle, literally, because it's just uncertain. It's indecisive. It basically did nothing. So it's like you just watch the whole candle just to close, and it tells you no new information. Those are always the worst. But let me see. We just saw US30 once again trading back and forth between the lows of this support. It gets back above, so it's right now a little bit back and forth. We'll just wait for that candle closure and see where that picks up. And then UJ also just had a minor retest of the area, still holding above. These candles are crazy. Is this really what I'm reading right now? This is a 3 pip candle? Or is that 30 pips? That must be 3 pips. In the past 30 minutes, price has gone from this low to this high. Yep, about 3 pips. I'm reading that correct, right guys? 3 pips. That's the spread on gold, man. Crazy. 3 pips is wild. In a whole 30 minutes. During New York session as well. Like that's... You ask me why I stopped trading Forex, there's your answer. As you can see, which one works best for technical analysis? For technical analysis alone, I would say I would have to lean towards US30, I think. For technicals alone. Like if you were to say, you know, I strictly trade technicals, technical analysis, and that's what you decide to do, I think US30 might be better because of the fact that a lot of the breakouts that happen, they do hold, you know. Or in the break and retest, like just based off what we've seen, US30 will hold. And that's just from technicals. Because you guys see, like the US30, the fundamentals are really much the same. It's just a little bit different because this is like has to do with companies, you know. So a lot of times you might see bearish fundamentals and you think US30 has to go down, but then a certain other earnings report kept it bullish. And so it makes it a little bit tricky when you trade the fundamentals. Because a lot of times it'll be very hard to have like these stock markets sell off, you know. But so yeah, that's why I would say like technical analysis alone, how you guys see us do, US30 is a little bit cleaner. For gold, I think if you do technical analysis alone for gold, you are just committing suicide. Definitely not gold. Like I could be wrong, even with US30, I'm sure it's beneficial, but from my experience, you know, US30, SPX, NAS, those are those pairs that you can kind of get away with only doing technicals. But still, that's in my opinion that you're still cutting yourself short. Like, why be ignorant to the world events? But all right, so we have 30-minute candle closing within the next couple of seconds, guys. With those, Brian, would those be good pairs for a beginner? NAS, US30, SPX? Hell no. Brian, no. I would say NAS, US30, SPX for beginners is not it. Stay away from that because it's too much. It's too much volatility. I would say go into Forex pairs and learn market movements, market dynamics, and how markets shift out of cycles and things like that. US30. The US30 is wild. Look at that. Come on, guys. That's like I can't even sit here and be like, yeah, we called it, because we didn't, you know? Like we were talking about the idea, but then it's like in 1 minute, really? It's like market open and it was just gone. This is what I mean about US30 and being in a position before. Entered at the top of that zone where like up here, 50,000s, 920s. You got in those buys or you got in these buys, like maybe a breakout out of these. TP smash though, that's... Yeah, for the most part, as we've seen US30 do this a lot of times. This is what I mean by you can get away with technicals alone on US30. Because you have these moves take place pretty much almost every other day. during market open. During those first 5 minutes of market open, we see this happen. But again, it's just, that's at market open. That means you were positioned ahead of time at the support. You absolutely smashed it if that was the case. The analysis, for the most part, as we can see, beautiful analysis. Look at the beautiful wick rejections. You see how we were using still the candle bodies in our favor. Here it was a 30-minute candle closing below. So if anything, faking sellers out, because we had literally the next push just absolutely completely run through all of that. So no, I entered on the wick of 929. Also, you're nasty, is what you're saying. You guys seen, I think Zuan has been sharing some of his trades. All the trades that Zuan has been taking, they're all ideas that we talk about here, and this guy's been making money. Like, come on. Commission. Now I'm playing good stuff, man. Like I always say, man, journal your trades, rinse and repeat. You know, you can walk away, call it a day at this point. Like, what else you want from the markets, man? This is pushing right now on US30. You know, up way more than 250 pips there. Gold is having a slow and steady move lower. As we only got, let's see, it was the 15-minute closing below. 30-minute as well, closed below. We haven't just gotten any retest. That's the only thing. But still, we're getting the move down little by little on gold. Today, gold is a little bit slower. As you can see, the pushes that we keep getting. You get those recoveries. It's like you get a low, a recovery, a low, recovery. We have a new low. If we can't break these lows, then expect a recovery, possibly up into these highs, 45.14s. As long as we're not breaking back above our area of interest, we can very much stay bearish and look to take any more sells on gold. Really, at this point, what can shift gold into more bullish is going to be a bad report. Like if we see a really pessimistic report, then that's where we can see maybe some dollar downside. If we see like a really bad JOLTS job openings report, like really bad, I say it's a really bad report, dollar starts to come down and feel some pressure, that's where gold can potentially flip. Because remember, a lot of these reports, like let's say the report of today is not as important as the NFP, but a lot of times markets will jump the gun assuming that, let's say today's report will be bad. They're going to assume, the markets will price in that the other reports that are going to get released for the rest of the week are going to be bad as well. Like I've seen that take place. It's not always, but I have seen markets will start to price in. Like let's say, let's think about this logically. Like say all the labor market reports from this week are bad. JOLTS job openings, ADP, we see initial jobless claims is bad. They're all bad. What makes you think that the day afterwards you're going to get good reports? All these reports are coming from the same data, same months. So it's an assumption that those reports are still going to be bad. That's where you have markets, start to move ahead of time. Again, not always, but it's one thing that I've seen happen before. So that's why I say today's report, if we see that it's very bad, then we could see markets start to price in maybe a much weaker labor market. A weaker labor market, just by definition, we understand that's bad for an economy. Bad for investors, we can say, right? From an investor's perspective, do you want to invest in an economy that's suffering from the labor market? When you have a suffering labor market, you have less people employed. Less people employed means less people paying for things or able to pay for things. That means less trips, less fancy restaurants, less drinks on a Friday night. Basic things like that, that's kind of like, you guys got to study or look into the basic definitions of like macro and microeconomics, and it tells you basically what I just told you right there, right? The behavior of people through the understanding of these reports, But all right, so very, very good calls there, good trades. This is one, once again, hats off to you, because that, my friend, is a ballsy trade. I will say that. Off of support, you entered, you trusted the analysis, you trusted your risk. I'm assuming you were very comfortable with it, and you got fucking paid. So good stuff to you. You know, like at this point, stay patient, keep it composed. Let's not look back and try and give back the profits. Let's basically just rob the market right there. Let's take that money home and call it a day. So very, very good stuff right there, my friend. Question for you guys. Are we gonna wait until 10 today? For the report? I'll leave it up to you guys, because I mean, with that move on US30, shit, what else you guys want? Let's see USD JPY. USD JPY moved 4 pips. Super slow. We'll do another pair. We'll still do UJ, but next week we'll do another pair. Up to you guys. One of these right here. Has to be USD CAD, GBP USD, Euro USD. I think we could do maybe Euro USD for next week. I'll move that up here. I started with USD JPY because UJ is like one of the easier ones. Because for the most part, you look at UJ, or excuse me, Japanese yen, and it's weak. You close your eyes and you know that the yen is weak. You know, it's very easy to tell. Obviously, anybody can read that right there, and they just know, okay, yen is fucking at all-time lows against the dollar. That's strong, above the 99s. That's, you know, very simple correlations. One is weak, one is strong. Let's follow the strong one, and we'll take trades based off that, you know. So that's why we started with USD JPY. But we can get into Euro USD. USD CAD, I'm gonna leave it for last, just because USD CAD is very correlated to oil. So we'd have to break down oil, go over that, then go over USD CAD, connect that there. So that one can take a little bit longer. And we don't want to get too overwhelmed. We don't want to get on stream and we got to go over gold, US30, and a bunch of other pairs. And we do 30 minutes, 45 minutes of a breakdown, and then we don't even talk about the trade ideas, you know, and then we get lost in just doing breakdowns. We want to make sure we do like how we've been doing, which is we do breakdowns, we do even in depth. Like sometimes I think, damn, I talk too much, you know, because I'm just breaking down every little step that take place. But we talk about trade ideas. And from what we see on the chart, or excuse me, on the chat, people make money. So that's what matters. That's what we're here for. We're here to learn, to improve, to make money. We're here to take over the game, my friends. But all right, gold, yeah, slow and steady. I guess we could give it another 20 minutes until that report comes out, just to see if that's going to bring any sort of new volume, volatility. Someone had asked me a question earlier, but I lost it. Let me see. I'll tell you the exact one. This is the one that I found most like decent, I would say. This is CME, Japanese yen futures. And I honestly just look at this on the daily time frame, not really diving too deep into it. By just looking at the daily time frame, especially on the Japanese yen, for the most part, you know that it's mostly weak. That's what the narrative has been for years now with the Japanese yen. Like the Japanese yen has been on an absolute. Where's the? How can I zoom out even more? Whatever, you guys can clearly tell. We're literally at all-time lows on the Japanese yen. Again, this one we can do a little bit of a deep dive on fundamentals as well. So we got to break down JPY. We got to break down oil. But all right, let's go back to gold here. You saw what I was using, by the way, right? CME, Japanese yen futures. You'll be good with that. And then the dollar is the DXY, just in case you didn't know. With the yields, the 2-year, 10-year, 30-year, that's really the only ones I look at. And I don't even really look at them. I'm more so looking at the percentages of that. And then with that, whether it's in the reds or in the greens, I know the day's current momentum. Okay, I got you. No worries. First time tuning in, I entered US30 buys. Wow. Entered pre-market. I mean, you got paid. That was a push. Just be cautious of those market opens because that could have been the same push against you. So you have to be cautious with those market opens. If you know you trust your edge, you trust your analysis, you know, entering a few minutes before, it's not a bad thing. It's just if you have no idea how the markets react around that time, that's where it's bad, because then you're just caught completely blindsided by that amount of volume. So as long as you know what you're doing, you're good. Are metals generally loosely correlated to each other? Yeah, they're very correlated, I would say, for the most part. Really, markets as a whole, they're all very interconnected. Like you guys saw that yesterday. How we were, as the market was going against us, rather than us freaking out or being here like, oh, why is this happening? We looked at different markets and we understood what could have been the cause of that. And then we confirmed that with an article afterwards, which we looked up, thankfully. Versus today you didn't see that. Today we just got price action invalidating our bias based off of a lower time frame, which was a 15-minute candle closure. And that's where we saw the potential for us to see a move lower. Yesterday was really more so fundamentally driven, which was this sell-off right here. Today you can see the difference, and look at the difference in a break of lows yesterday. Almost like looking for the same thing. We were looking for bounce plays off of a zone of interest, but then fundamental event kicks in and we completely wipe through that zone. Versus on a day like today, we were looking for buys above this area of interest, but we got candle closures against us, and that gave us way more time to adapt to that. And then look at how afterwards you see price retest, then it pushes lower. Right now I retested again, it's still continuing lower, like it's still being respected, like it's way more calm. So that's where, for me, I like gold. You know, because even if it's fundamentally driven, we know we can be aware of that. We can try our best to adapt to that if conditions allow it. Because a lot of times, even with fundamental events being in your favor and you understanding what happens, the volatility might be too high. You know, the volume might be too high. Price action might not give you the exact retest point that you need for your risk to reward, and therefore you miss out on the move. It happens, you know. It's not going to be perfect each time. But then you have other days where it's, you know, on a day like today, where you just have to be more patient for candle closures and you let the market flow and do what it's going to do without you having to fight it. Like, you notice how we never fight the market? You know, we're never here like confused. Some days it gets tricky because of the price action, because we follow candle closures, and then some days we have a candle close below followed up by a candle close above. So at that point you're mixed. You're like, which one do I follow? You know, which one is stronger? Those days are those are the tricky days. But what do we do on tricky days? We don't force the market either. We just simply sit out. We don't force any trades. And then we live to trade another day. Like, you guys would be surprised how much better your results might be at the end of the month if you chose more often not to trade. When you know you don't have to, you know. If you know you shouldn't be trading, yet you are, and you know, and you're taking losses, then that's already one mistake that if you can just check that off, get rid of that mistake, think about how many losses you're gonna save yourself at the end of the day. Think about the people, especially the people right now that are in that break-even phase. Only reason you're in that break-even phase is because you still make silly ass mistakes. Let's be real. And I'm sure you will note that by reading your journal, which is the rant I always get into. You guys have heard me say that. But again, you'd be surprised. That's at least what happened to me when I was in that break-even phase. I was in that break-even phase, but every time I would look, I would be break-even and I would come out the month and it's like, okay, I didn't make any money, but I didn't lose anything. So for me, that was already a big step from going from losing every month, which sucks and it's annoying. And you know why you're losing. You know you're over trading, you're over leveraging, but you're like hopeful that one day it's gonna work out like that and you're gonna be rich or something. But when you get out of that phase and you're more consistent with your trading, and you reach that point where it's like, yeah, you're right there between break even, and it's like you're up 1%, then you go back down to 1, then you're back at 0, and it's very back and forth. Still gambling a little bit because you're being maybe too back and forth with your positions. You read your journal and you realize, damn, this day I took 4 trades when I know I should only take 2 trades. That's 3 extra losses, or let's say 2 extra losses right there. Imagine you didn't do that silly mistake that day, and you learn to just remove that. I'm not even telling you to learn a new concept or do something completely different in the chart. I'm just telling you, learn how to sit out and be more patient and be more selective with your trades. You'd be surprised at the end of the month how much better you are, because you read your chart, or excuse me, you read your journal and you realize, damn, I didn't make any silly mistakes. Now, magically, I'm up 1%. And I'm just sharing you my experience. That's what happened to me. I'm like, damn, I realized I barely traded this month, but I also didn't do stupid things, And then guess what? I have better results. So I traded less, way less stressed, way less worried about what the market was gonna do. Wasn't worried about missing moves or FOMO and this and that. Then I realized, like, damn, I could just be doing this every month. But of course, easier said than done. Let me see, Zwan. That was a huge thing for me. My setup is valid on US30, but I would gamble a little bit during pre-market and then be down like 1 or 2K, and then my setup plays out and I make it back, but I could have made more. Exactly. That right there. That is like such, and it hurts. It hurts because it's like, damn, I made silly mistakes just for me to make it's like you realize I did, like, let's start from 0 off of that example. For the day, you take 4 trades, but out of those 4 trades, 3 of them were silly ass trades. They were early entries. They were you FOMOing in, and then it was 1 revenge trade before finally you have your beautiful setup that you were waiting for the entire time. You also take that one, and that one works, and that one you make your money back. And then it's like, what did I even do all that for? You had the perfect setup play out 2 hours after your trading session, but the fact that you couldn't hold yourself and be patient before, now instead of you having profit in your account, in your portfolio, you're just recovering losses. So think about that in the long term. In the long term, if you continue to take stupid trades, over trading, over leveraging, revenge trading, and then those days, which we all have good days in the market, and we have those days where it's like the market closes beautiful in our favor, we take a trade and the market just goes. Those days we finally exploit the market, we get our profit, but our profit is just recovering from all the stupid losses. So then you end up at nothing, you end up at 0. Then that day will lead you to, oh, you know what, now that I'm back at 0, you invite that demon into your life again, and now you're over trading on the day that you just took a beautiful setup, you did everything you needed to do. But the fact that you won profit, and you're thinking like, damn, those losses, I shouldn't have taken them. What if I take 1 more trade and I recover those losses? Since you're on that high off of that win, and then you lose it again. The market will do that to you. That gambler's fallacy, you can almost call it, right? So that's why, again, you have to just be composed, be patient, wait for your setups, wait for the market to give you those days that it's really in your favor, at least to the best of your ability and your knowledge, and you go for it on those days only, and you become selective with those days. And you go from trading 10 times per week to all of a sudden you're trading 3 or 4 times. And you'll have 2 wins, 2 losses, instead of 8 losses, 2 wins, because a bunch of those trades were just revenge trades. And we know it. We know we take, like, let's be real, we're not all perfect. Those revenge trades, it happens. Especially you tell yourself, like, you know what, I didn't lose. Like, I managed my risk on that first loss. Fuck it, I could just take this trade. And then before you know, you're forcing a trade that still you don't have confirmations in your favor. You're just forcing ideas into the market. Because it's like, oh, you're trading below a zone of interest, I'm going to take a sell. And then you're taking a sell when in reality you should be waiting for a 1 hour to close in your favor first, So all of those little things, little by little, once you remove that, everything falls into place a lot easier. A lot easier. Where can I learn price action to the fullest extent possible? Join these lives every day. I promise you, you will learn all technical concepts that you need to be a successful trader. Because the things that I teach are really just that. You know, they are, I would call it the basics of technicals, but we combine that with fundamentals and obviously throw it live on a chart, and then I beautifully break it down on a screen for you guys on all the time frames: daily, 4 hour, 1 hour, 30, 15, 5, 1. Those are like the main time frames. You know, I stick with the main time frames. I don't really do 2-3 minutes. I know I've seen people do 2 hour time frames. Everybody, you know, like I said, everybody has their own. For me, I learned price action basics with those time frames. I stick to those concepts. I'm loyal to that, and that's all I do. But all right, guys, we have about another few minutes until this JOLTS job openings gets released. We want to see either very much above 6.8 or below, so that way we have an easy read, and we'll see how the market reacts off of that, and then we'll prepare. We'll be ready for that. Oh my goodness, look at US30. And then we'll call it a day afterwards. We had a great session once again today. Zwan, I appreciate that, man. This is Zwan, I want to see you joining the lives every day as well. I appreciate your honesty on the lives, you know. Let's keep it real. But yeah, Edward, the other thing is ask questions, bro. I'm one of those YouTube streamers that you can ask questions to and I will answer. You know, as long as I'm not doing a breakdown. There's gonna be days where I'll tell you guys, all right guys, I think we can call it a session, call it a day. And someone will ask me a question and I'll stay for another 30 minutes, you know? So just ask questions, man. And don't be afraid to ask basic questions. If you're asking basic questions, I'm gonna just hold you accountable. Maybe I might tell you, hey, you know what, go on this website and go over those basics before you come back here. You know, if I have to be honest, I will. So yeah, any questions you might have, why, like, I'm gonna try and make a video for you guys from yesterday, because yesterday we had a good talk and it was short too, talking about the importance of candle closures. You know, something as simple as that, where people can learn and see a different perspective. And again, it'll improve their trading. So like I said, anything that I tell you guys is because it's improved my trading. It's my own experience. It's advice that I've given to others and I've seen others win as well. So that's really what I'm here to do. What time do we meet each day? Each day we're on from, let's call it 8:30, because 8:30 really is the time, but some days I'm on at like 8:20, 8:15, a little bit earlier. But usually anytime you get on YouTube, anytime before 8:30, you're going to 100% see me live. If I'm not live, it's because something happened in my life. But every day I'm here looking at the same charts, same concepts, same ideas, following the same narrative. Like let's be real. Some of you guys, I'm not sure, I'm assuming, how many of you guys knew about fundamentals? And then how many of you didn't? But then also, for those of you that did know about fundamentals, how many of you did not dive into it at all because of how complicated you guys might think that it seems, you know? And then how complicated do you guys actually see it is? Because I don't think we do any sort of complicated things. Like, sure, the lingo might be a little bit different sometimes, but we don't do anything crazy. We're not doing insane macro analysis. And I'm here talking about the macros for an hour straight, for 45 minutes straight. And you guys are like, what the fuck? What did this guy even say, you know? We talk about fundamentals for 10 minutes at a time, 15 minutes at a time, break down an entire concept, you know, to the most basic terms possible. We keep it simple because we're trading at the end of the day, you know? I can go off and go over articles, show you guys history, history repeating itself. I can obviously, and we will later on, But for the most part, we try and keep things on the trading side. You know, we want to talk about trading, we want to talk about the charts, we want to talk about the moves, we want to make money, you know. But we know to do all that, we have to stay aware, we have to stay knowledgeable, you know, we have to be smart. We're not here just doing random things. So I think our approach is pretty good, you know. I have just like less than 3 minutes until the Joe to job openings comes out. So far on gold, all the retests, like we've been talking about, guys, on this structure, this lower time frames, still moving lower, still pushing lower, still closing below, still retesting areas of interest, and then continuing lower. You know, from the 45.15s, we've gotten a decent 100 pips worth of push. So really, really good moves today. Both US30 and gold so far have been good. Gold too, because even though our analysis was more bullish at the beginning, once we started to get those candle closures going against us, again, we don't fight the market. We react based off what the market gives us, and then we go for that. So luckily we had lower time frame, like the 15 closing below, and then the 30 closing below as well. And then we still had some retests of that area and continuations after we got the 15 and the 30 closing in our favor. Did you start off as a scalper or day trader? I started off as a scalper. I think most of us do. I started off literally just doing breakout trades. Like that's all I knew what to do. When my genuine first 6 months of trading, I thought the market was just buy when it breaks a high, sell when it breaks a low. That's it. I didn't know about support and resistance too much. Like I knew about it, but like I didn't know what it was really for. I was just so marking off a high, marking off a low, which I didn't even know on what time frame to mark it off. And then I would just scalp the market by trying to buy every breakout. Every break of high, every break of low, I was just buying and selling and going back and forth. So I still think, let me see, I still think that this is a little bit complicated, but I'm getting the hang of it. Remember, ask questions. If you think that anything is like, damn, I didn't understand what you just said, ask questions. Because remember, the other thing is, I'm explaining these things off the top of my head. Like you ask me a question and just off the knowledge that I have, I go for it. You know, I don't have anything to read. I don't have any scripts in front of me. I'm just going based off of my knowledge. So I know because I do that, I can rant and I get lost in my own head and I'm just explaining the concept. So sometimes I might explain it too fast. Maybe I said something that or excuse me, maybe I skipped over something that didn't completely solidify the concept for you, so that way you can understand it. So just ask, you know, even if I explain something to you and you're like, yeah, you know why I didn't understand this part, and you're genuinely interested in hearing me out, bro, that's what I'm here for. You know, don't be afraid to ask. So if it's a little bit complicated, tell me what is complicated and we'll talk about that. Maybe not in the stream, but we can save the question for another day. So, because again, if we're doing this every day, we might as well make it worth it. You know, you don't want to sit here every day and then be lost. You know, we want to make sure we're obviously composed, doing things correctly. But all right. So Joe's job openings looking like an optimistic report because it's way above the 6.8. So 7.6, that means more job openings. That would be more optimistic for the US dollar. That explains why gold had the minor reaction towards the downside there. Let's see if dollar is also pushing a little bit. We can see that. Just off of that push, you can see this is on the 1 hour right here. Precisely on that dot. As the data came out, dollar is continuing to push. Like I've said before, this report specifically, in terms of like importance, we know the important report we're looking at is going to be on Friday. That's the NFP, the unemployment, and the wages. But this is still important, and it's still a good enough report to show us that, you know, it's way above the expectations. So there is something fresh to price into the market. In terms of ideas, guys, we're gonna stick with the same ideas. This is not invalidating our bias, in my opinion, but we can still easily, in terms of regular market structure, because remember, when you have fundamentals coming out or economic data coming out, just because it comes out in a way that you believe the market should push bearish, it doesn't mean that it's gonna do that right away. The market could easily recover off these lows, retest previous areas of significance and then push lower, you know? That's why we set ourselves up and we create these scenarios so we can be prepared. So that way we know, okay, the fundamentals right now, they're still more in favor of further sells on gold, but gold has now reached the previous area of significance where we've seen strong buying pressure from, which is these lows around where we've just reached, these lows right here. We've seen in the past, off of these lows, strong pushes, right? We can see that, very strong push off of these lows. Push up, a push off of these lows, you know, creating these highs. Here again, pushing above our area of interest. So this is a zone of interest where if we trade above and stay above, we could see pushes towards the upside. So where we could see the push towards the upside take place, to continue on this structure that we're on now with more bearish structure, we'd have to stay below 45.13s, 45.14s for us to continue with this bearish momentum. If we start to trade above that, then be on the lookout for pullbacks into these highs right here, which is this area of interest. That's above 45.16s there. All right, guys? That's for gold. Then we have US30. Yeah, US30 a little bit, I would say a little bit easier just based off the structure, the bounce that we had off of these lows, the fact that we're trading above this resistance over here. We're still respecting that area. So above the 50,000s, 920s on US30, we can expect to see deeper moves towards the upside at this point, at least into the 51,000s. 51,000s and 40s, right around these highs right here. Or maybe even 51,030s, just around those highs. We're not too far off that area, all right? So yeah, that bias would still continue there. Dollar, it really just had a minor reaction off of that news report. But yeah, expect and maybe some pullbacks going into that area. You can see that price action. Still very much momentum is pushing lower, but you can see, again, this is something I always like to do. Look at the lows and then look where that came from, or look at the highs and look where that came from. We have this low, where did that come from? These highs. So we know not only is this an area of significance on the 1 hour, it's also a structure point on the lower time frames. So we know, okay, momentum wise, we want to stay below that structure point. And then if we can continue to reject that area, we're not trading above our area of interest, we can look to continue selling gold back down into those lows of the 4,500s, possibly a little bit lower into the 44.95s. All right, guys. And then UJ had a push right here off of the optimistic data that we just had. We have still continuous candles closing above resistance. This was the retest and then still closing above. So we have above, because we talked about breaks and retests, 9 pips, crazy. We talked about potential retests off of this zone. We just wanted to see if we can get a little bit of a deeper pullback into like the 750s right around here. And then before we continued, we didn't get to the 750s, we got to the 760s. So very, very literally 1 pip away, guys. Before, as you can see, we had a 10 pip push towards the upside there. So obviously it's a lot slower moves, but you would be surprised how much money you can make off of 10 pip pushes. It all depends on everybody's capital. So don't be fooled by just the idea that it's like, oh, this is not as strong as gold. Because in reality, again, there's still plenty of opportunity. Still, everybody has their own way of viewing the market. For some people, they might like the fast-paced US30 type of vibe, and they make money like that, and they can make money on USD/JPY. There's other people that are going to make money on USD/JPY, and they can't make money on US30. You as a trader, you need to figure out what you're better at. But concepts stay the same, ideas pretty much stay the same, and as you can see so far, from having macro awareness, macro analysis, understanding the overall movements and the flow of the market, understanding that just by seeing that the dollar has been stronger and has been overpowering the yen, which has been very weak, what analysis does that give you right there? What bias does that give you? That gives you a more bullish bias on USD. So you know USD pairs are bound to overstrengthen whatever other pair they're against. In this case, USD against the Japanese yen. From last week, look at that analysis that we're still on. You can see how swing traders can eat on forex pairs, and they're holding their trades. But look at those moves. Those are clean, structured moves that were just clean continuations right there. So great job today, guys. Let me just clear this chat, and then we can call it a day, guys. Once again, I appreciate you guys. Connie, June is my lock-in learning month. Every single day, live, Monday through Friday. We are here breaking down everything, technicals, fundamentals. You see these reports right here that everybody else probably doesn't break down or ignores? Don't worry about that. We're gonna break it down. I'll make sure to explain it to you. If you don't understand it, I will break it down for you. Don't even worry about that, okay? Let's not be ashamed of asking questions, guys. Let me see, BK Samurai. So many, sorry, big fingers on the kid. I'm coming from YouTube, so many strategies. I just want a basic way to trade. I like, exactly, bro. BK Samurai. I mean, first of all, your name, super dope, so you gotta join. I'm expecting to see BK Samurai in the chat. If you enjoy the simplicity of what we do, as you can see, we kept it very simple today. Look at gold. Did just what we were talking about after we got a candle invalidating our original bias. You see how we didn't, again, no forcing, nothing. Just following price action, following those clues. Beautiful moves to the downside on gold. US30, same concept, same idea, obviously different market. Again, beautiful moves. USD JPY, same concept, same ideas. Slower moves, but still, overall, I think we do a pretty fucking good job. I mean, come on, guys. Does bar replay help your trading? For me, I don't think it does. I wouldn't bother too much with it. I would more so focus on having a built system. If you need help on coming up with a system, Tarzan Trades or GatesFX.en, I believe the Instagram is. You guys can see more info on that on the description. Just hit me up. You know, I'll be happy to help you out with game plans, whatever it is that you guys may need your help with, my help with, excuse me. I'll be here. So last question here, KDS, do you use indicators or just support and resistance? Mainly support and resistance and like key levels, and we back that up with fundamentals for the most part. So we keep it simple. But all right, guys, great stream today. Good job today, guys. I will see you all tomorrow. If I can get on a little bit earlier because we have the ADP employment change at 8:15, I will. So just be aware around that time, all right? 8:15 is the earliest I'll go live just as this report is getting released. We'll break it down and then we'll go from there.